This video tutorial will look at an example of when you would use a transfer journal. Let's review for a minute. The trust account holds money that belongs to clients and customers. It is not the agency's money. In order to know how much of the money belongs to which client, we have ledgers. This details how much money has been received and paid out on behalf of each client and the balance of each ledger, which translates to the amount of money in the trust account belonging to a client in relation to that property. If an agency is managing a number of properties belonging to the same landlord, this landlord will have a separate ledger for each property that is being managed. Each one shows the balance being held in the trust account in regards to each of these properties. At the end of each month, the money still in the trust account will be dispersed, or in other words, paid out of the trust account to the client unless either the matter is not finalised, for example, a sales transaction that has not yet settled, or if the client has asked for the money to be retained in the trust account with notice in writing. Before we look at when you might use a transfer journal, let's first look at when you would not use a transfer journal. When money is paid out of the trust account, this is not entered into the transfer journal. This includes disbursements such as paying out rent collected or paying out the balance of deposit monies held following settlement. Another example is paying advertising to a supplier such as realestate.com.au. It is important to understand that a payment is not a transfer, and in trust accounting, these terms are not interchangeable. A payment is money that is paid out of the trust account and is recorded in the payments cash book or journal, whereas a transfer is a record of all transactions that don't affect the trust bank account and include amounts such as transfers of money from one matter to another or correction of an incorrect posting. These are the amounts that would be entered into a transfer journal. When we are using the transfer journal, the money has not left the trust account. It is merely shifted from one ledger account to another ledger account. Let's now look at an example. Tom Jerry owns 2 investment properties that are being managed by your property management agency. The commission is charged at 8.8% including GST per property. The agency does not charge statement fees. The property address of the first property is 1 Sunflower Street Sunshine, rented at $400 per week, and the other property is Unit 1 of 43 Daisy Drive Sunshine at $450 per week. The body corporate or strata fees of $2,900 for Daisy Drive will be payable in the next month. Tom has asked you to transfer the required funds from the Sunflower property into the Daisy Drive account to ensure that there is sufficient funds available to pay for the expense. The following rent payments have been received for the month, with a total of $1,600 in received rent. The commission payable is $140.80 for the management of this property, with a closing balance of $1,459.20, which would normally be payable to the owner at the end of the month. The rent payments for Daisy Drive have been a total of $1,800 for the month. The commission payable is $158.40, and the closing balance on the account is $1,641.60. If you recall, the amount needed to pay for the body corporate strata fees is $2,900. But the closing balance available in the Daisy Drive account is only $1,641.60, which means the account does not contain sufficient funds to cover this cost. In fact, we need another $1,258.40 to make this payment. So we return to the ledger for Sunflower Street. Using the balance of this ledger, we can now transfer the amount of $1,258.40 to the Daisy Drive account to ensure sufficient funds will be available for the body corporate strata fees payment. There is also $200.80 left in the account after the transfer, and as a result, this amount will need to be dispersed to the landlord as it is surplus to the funds required for the body corporate payment. This will leave the account at a closing balance of 0 for the start of the month once again. Upon returning to the Daisy Drive ledger, we will now add the transfer amount of $1,258.40 to the $1,641.60 balance that you will see now we have $2,900 available, which is the required amount to make the body corporate strata fee payment. This amount will be retained in the trust account as per the client's request. The final step that we must take is to update the transfer journal. Since this amount is not being paid out of the trust account, we need to enter this into the transfer journal to ensure there is a paper trail of the money moving from one matter to another. You will see that we have the date of transfer, the amount of money that was transferred, the account from which the amount was transferred and the account to which the amount was transferred into, the reference number of the transaction, the balance in the transfer journal, and also the closing balance for the transfer journal for the month. I hope this short tutorial helps you to better understand the use of transfer journals in the trust account process.